I asked Wall Street Millionaires for investing advice. That is the name of a video uploaded here on YouTube by Jordan Welch, which now has over 1 million views. Of course, Wall Street is the kind of home of stock market trading, I would say, potentially not so much investing. Many of the best investors in the world tried as hard as possible actually to stay quite a distance from Wall Street for the main reason that Wall Street just has a lot of kind of short-term noise and it can be very distracting from long-term investing goals. You know, Warren Buffett is based in sleepy old Omaha, Nebraska, and Guy Spear, for example, has even written a chapter in his book about why he moved to Zurich in order to sort of escape the noise of Wall Street and so on. So this should be a pretty interesting one to react to, and I'm wondering whether we're going to get a lot of kind of short-term like trading type advice, or whether we're going to get a lot of people that stick to good long-term value investing principles that have worked for a long period of time. So I've watched about the first minute of this video last night and then kind of stopped. So once we get past that point, I'm basically watching this thing fresh for the first time. So I hope you enjoy it. But before we get into that, we do have a sponsor for today's video, and this video is sponsored by ShareSite. Now, ShareSite is a software tool that I use for basically two different reasons. Firstly, I use it simply to track my portfolio. It integrates with the brokers that I use, pulls through any transactions that I'm making in my portfolio, pulls through any dividend payments, and counts for all of the different sources of gain and loss when you're investing in the stock market. That's been particularly important this year because I'm based in New Zealand, I invest a lot in the US, and I think my portfolio is up something like 7% this year just from currency fluctuations. And if you weren't using a tool like ShareSite, you really wouldn't be able to track that particularly well. And the second reason I use ShareSite is basically for tax time. Now, ShareSite allows me to extract a couple of different tax reports at the end of the financial year. I can then ship those reports off to my accountant, and that is basically it. It's a huge time saver. I really don't know what I would do without a tool like ShareSite when it got to the end of the financial year and it got to tax time, and I had to kind of understand all my different tax obligations from my stock market portfolio. So if you're interested in getting 4 months free off of an annual subscription to ShareSite, you can go to the link sharesite.com/investingwithtom. There is also actually a free version of ShareSite you can use forever if you have less than 10 stocks, and it's a great tool, highly recommend it.
Today I'm here on Wall Street during one of the worst financial crashes in history. My goal is to talk to the people and figure out the best way to invest during this crash. And I also want to try to get into the New York Stock Exchange. So here we go. What's going on, man? You guys think you could be in our YouTube video for a second?
No. Sorry.
Would you be in my YouTube video for a moment?
Sorry, brother.
Look, we getting in there today. I don't know how. We're gonna do it. We're going into the stock exchange. You be in our...
People are just on a mission in their day-to-day lives. They don't often stop for a chat.
Go for 1 sec?
No.
Okay.
Okay.
All right, guys. They're not taking me seriously enough, man. So something's got to change. My boy looks like a criminal right now. We need to get him right. Yeah, we really need like the perfect, simple stock exchange outfit. Yeah. I'll buy this. All right. Think I'm ready for the stock exchange now?
I think you're ready for the stock exchange.
All right, let's get it. Thank you, man.
Of course, man. You have a good one.
See you later. It's go time. Let's do it. We're back on Wall Street. Let's see what the people have to say now. Excuse me, ma'am. Do you invest in stocks at all?
I do, yes.
How are you investing during this market crash right now?
How am I investing?
Yeah, how has your investing strategy changed during the drop of the market?
I'm buying more.
I love it. Enjoy your day. Buy some more, baby. Buy the dip, baby. Come on. How are you investing right now during this?
Generally speaking, that's pretty good advice. I would say if you are someone who wants to invest for the very long term in the stock market, buying consistently over a long period of time, dollar cost averaging is a very good way to go. I would also be a little cautious. We have come out of a period of very, very high valuations for a lot of companies. So just because a company is down a certain percentage doesn't necessarily mean it's cheap. You've got to understand sort of the absolute value of that particular business and whether you're getting a good deal kind of regardless of where it's traded in the past. But overall, not a bad start here.
I'm actually just entirely invested in ETFs, mutual funds.
I'm in some Bitcoin and some crypto. I have some NEO, some electric car company stocks, and I'm long term.
I just save a lot of money, and I do a more conservative, ETFs. I invest in like different real estates in different states.
Do you feel like now is a good time to get into the market?
Okay, a lot going on there. So we have one guy who's basically fully invested in ETFs, an exceptionally reliable, get rich slow, but almost a high probability of getting to the finish line. A very good strategy. Even Warren Buffett recommends it for people who don't want to pick stocks. We then have a guy who's buying electric vehicles and cryptocurrencies. I expect that guy's probably down quite significantly this year. And I'm not going to say that cryptocurrencies aren't going to do well in future or whatever, but I think those types of investments should probably represent a smaller percentage of your portfolio, particularly the crypto side of it. There's just kind of no way to know exactly what that cryptocurrency is going to be worth in the future. As far as the electric vehicle things, I think there are definitely going to be some businesses that do exceptionally well. You have to, again, understand how much cash they will produce relative to the price that you're paying, and I would argue that in many instances the prices are exceptionally high. So if those types of investments represent a big chunk of your portfolio, you definitely are going to need to know what you're doing and understand the intrinsic value. Read the financial statements, listen to the actual performance of the business. Don't just say electric vehicles are going to be huge, therefore I'll buy Tesla or NEO or whatever. It doesn't quite work that way. The price you pay relative to the value of the company does certainly matter.
Buy gold.
Got you, buy gold. That's a good tip. We haven't heard that one today. Thank you, man.
Okay, now we're getting to the Wall Street type advice. Obviously, gold, like any asset, can do very well in certain periods of time. It has a reasonable history of doing well in periods of inflation. So maybe it's a good short-term way to go. Not advice on my part. But it's pretty clear that the very long-run returns from an asset like gold are not good compared to just buying American businesses as a basket. So keep that in mind. If you want to speculate a little bit with a small chunk of your portfolio, more power to you. But I think if your goal is solid long-term returns, owning good businesses over a long period of time is probably the most reliable way to go.
Do you work here on Wall Street?
A little bit.
What do you say to the young, new kids that are just getting into investing? Is this a good time to get started, or maybe wait till things...
It's a good time to get in, but you got to take a long view of it.
Definitely.
You gotta plan for not months, but years, 5 years, 10 years.
Yeah.
And stick with it.
I agree with that. You look fresh today, man. Have a good day.
Thank you. Are you?
I think that's the best advice we've had so far. You really probably shouldn't be putting dollars into the stock market that you absolutely require in terms of spending in the next at least 3 years, probably closer to 5, or ideally longer would be best. The long run results from investing in stocks are pretty darn good, but the short term results tend to be very volatile. So you have to take a long view, and is today a good time to start? Who really knows? I think 20 or 30 years down the track, again, American business and stocks will very likely be more valuable than they are today. Will they be more valuable than they are today in a couple of months? Who really knows? But if you take a long view, you should do okay.
Interested in stocks at all?
We spend our money in any shops.
Gotcha.
not at the stock exchange.
Listen, you're probably going to be happier doing that.
Yeah, because I'm wearing it every day.
Yeah, and you look good too.
Oh, thank you.
Enjoy your
You
day.
too.
See you later. How does this crash look compared to what you've seen in the past? The way the people acting, everything. How different does it seem?
That's a good question. I think in the past two crises, COVID and financial crisis, there was a lot the government could do to really help with a rapid recovery. It's a different circumstance this time. Over time, the markets have always gone up, and just have confidence that things will recover.
As the afternoon was approaching, people were getting less interested in talking to me, and after being rejected over 100 times, I had truly reached my breaking point.
That might have been the coldest rejection I got so far.
And even though it was painful, it was actually great talking to all these people. But I was looking for a real Wall Street legend, and for that, there was only one place I could go.
Just a quick note to say that Jordan Belfort is not necessarily a Wall Street legend, although he is very well known.
How can I help you?
Well, you know, we got all dressed up and everything to try to come into the stock exchange. Is it possible to go in there for a video real quick?
Unfortunately, this hasn't been open to the public since 9/11. So I apologize.
No worries. Thank you, man.
I really wanted to go inside, so I decided to make a few phone calls to see what I could do. Unfortunately, I wasn't having any luck, and then I called my boy Sam.
Yo, what up, bro? We here in the city right now. We're on Wall Street trying to get into the stock exchange.
You're there right now?
Right now.
I mean, usually it takes about 2 weeks to get clearance, but I can feel sorry.
It looks like you're in the city right now. Can you come here?
Yeah, I'm just finishing up with a client. I'm actually about 15 minutes away. I'll transfer in a second. I'll be right over.
All right, bro. We'll see you in a couple minutes. Thank you. Our last hope.
Let's get Jordan. Yes, sir. So look, I have to make a call.
As much as actually visiting the stock exchange will have absolutely zero impact on your returns over the long run, I think it would be a pretty cool experience to get there. I'm going to skip forward a little bit in this video just to see if there's any more actual investing advice from people on Wall Street. So let's jump forward to that.
How are you investing during these times? What do you think about the crash overall?
So obviously the market's not where it was before, so we shouldn't be looking at the prices. I think we will be falling for the next few months, but I will be looking at the great companies like Tesla, Amazon, Nvidia, all the companies that in 5 years from now will still be rocketing to all-time highs and slowly averaging down. However, not overdoing myself, averaging slowly to an extent where I don't feel overextended inside the market.
No real comment on the actual companies he mentioned there, but I think he's got by and large the right mindset. Buy companies that are going to be more valuable in several years than they are today. Steadily buy into them over time. I think the comment on, I guess, basically not overextending yourself is a pretty interesting one. Guy Spear again uses this analogy of, you know, when he puts, call it 5% of his portfolio into a certain investment, he feels that that's kind of water up to, you know, his ankles or up to his knees possibly. Whereas if he were to put 20 or 30% of his portfolio into an individual company, that's kind of water, you know, up to his neck or maybe even over his head where he starts to feel a little uncomfortable. So definitely something to be cautious with. I know you can get into the trap when a company that you like continues to go down in price, you can keep buying it and all of a sudden it's an enormous position. That can be a trap a lot of people can fall into, and you need to be kind of humble enough, I guess, to realize that you may well be wrong about that particular company, and you need to have some sort of limit in terms of how much you allocate to one particular stock. Okay, so skipping forward a minute or so here, he's somehow secured an interview with a big dog on Wall Street, and he can't say whether he did or didn't get into the stock exchange, but if he did, he couldn't show anything in the video, so we've got a little animation, and he's going to ask this Wall Street big dog exactly what he thinks, I guess, in terms of investing advice. So here we go.
So first off, how long have you been coming to the stock exchange?
I came here in 1985.
Got you. And you've seen a lot since then, a lot of crashes, a lot of recessions. How does this current dip in the market relate to those? Do you see a similarity or it's way different?
I've seen the crash of 87, the bubble of 2000, the financial crisis of 07, you know, the crazy years under Professor Orange over there. And then I've seen COVID crash. I think this has components to it that I can describe that I've never seen before. No one's ever really had a health crisis this way before. The economies of the world were shut down to zero. The airlines, restaurants, hospitality, travel, this, that, and the other thing were basically done. The Federal Reserve bailed us out. But I think if we had not done that, we would be in much bigger trouble than we are now.
What's the best way to invest during these times?
I'm not a financial advisor. Disclaimer all day long, that's not what I do.
Understood.
There's no better time to learn about the market and invest and trade the market than during a crisis, because the volatility makes for great learning experience. If you're an investor looking to get into the market for the first time, you've got to learn how to do this. You can make money on an up market and a down market. Markets do go up and down.
We really appreciate it.
My pleasure.
First day on Wall Street was a huge success.
Okay, so I don't know that there was a huge amount of actual advice in there, other than to say many crises have happened in the past, they will happen again in the future, and people have to learn to stomach that and invest through them. And I would say that, You know, with all the kind of rational lessons we can get from investors like Warren Buffett, we can learn how to buy good companies at reasonable prices. But one of the more challenging parts for people oftentimes is just kind of stomaching market movements. You know, you can very well be right on a particular company and have it go down a lot in the short term, and you know, still have it perform very well in the long term, and you have to be able to stomach those big movements. So interesting to hear that kind of idea come through in these comments.
But honestly, y'all, this suit is like uncomfortable, and I don't know if this lifestyle is for me, so I think it's time to go home. See you guys in the next video.
Now, there of course is a time and a place for a suit. I tend to avoid those times and places where possible. I definitely prefer the t-shirt, but interesting to get some advice from, you know, the people on Wall Street. Again, I think the fact that they work on Wall Street is probably gives them a little bit more authority bias in people's heads than they probably deserve, I would say. And a lot of the sort of advice given in that video wasn't particularly surprising to me. It is really cool to see more and more people have this long-term dollar cost averaging mindset that I guess was initially started by Jack Bogle at Vanguard, who kind of invented the index fund basically. More and more of the market has gotten indexed over time. Whether that is a potential issue down the track, we will have to wait and see, but I think it is a pretty good, rational, kind of long-term strategy. There were, of course, still some speculative comments in there around crypto and electric vehicles and buy gold and all that sort of stuff, but I think for the most part, if people can ignore the noise and have a good long-term view, you will probably do pretty well. So I do hope you enjoyed that video. If you did, please hit like and also hit subscribe. If there's other videos you would be interested in hearing my thoughts on, let me know down in the comments section below. But that's all I've got for now, and I'll see you in the next video. Cheers.